you've been MD with Carlsberg?
I've been MD in Carlsberg Malaysia for 3 years now. Before that I was in China and Hong Kong for 3.5 years. First I was working in China on all the projects. Carlsberg is putting a lot of effort into Asia, in particular into China. So we now have 40 breweries in China. So my first job when I came out here in 2006 was try to help to get a little bit of structure into those 40 breweries, try to implement some of Carlsberg's management models, technical upgrade, people upgrade, branding strategies, etc. So I spent a couple of years on that, which was very tough. And then sort of my price for that was to get my first MD role, which was MD for Carlsberg in Hong Kong, which is a very nice little area. You can actually walk around the market, you can see everything, you don't have to fly anywhere. And the products was produced in China, so it's basically a purely commercial role. So that was my first MD role, and I did quite well, at least well enough to be offered my next MD role, which was to come over here, which is a big MD role in Carlsberg because we have a brewery. It's a listed company, so you get all the attention from the media, stock market, shareholders, and also it's Malaysia and Singapore, so it's cross-market. We also own some subsidiaries, and we have some investments outside Malaysia. We own our Lün Heng company in Malaysia. We own 25% of Carlsberg in Sri Lanka. So it's also the first time for me to be a chairman of other companies rather than just being MD. So 3 years have gone fast, and I've learned a lot.
What is your market share for your Carlsberg?
For the Carlsberg brand, we don't have the exact figures. There's not a Nielsen or anything here that can tell us exactly, but we know we have more than 30% market share for the Carlsberg brand, and we know that we are number one. And we know that over the last few years we've done quite well, so we think we have also increased the market share a little bit for the Carlsberg brand.
Sorry, when you say number one, in what sense is that?
Across all beers in Malaysia, Carlsberg is the number one beer based on the data that we can sort of access. The only sort of real fact source is actually the Nielsen data, but the Nielsen data only cover what we call the off-trade, which is the hypermarket, supermarkets, because you have the scan data. So when somebody buy there, it gets registered, and then Nielsen can collect all the scan data from all the hypermarkets based on sales. Yeah. So volume, numbers of bottles, not price, but numbers of bottles. Those off-trade data clearly put Carlsberg as a number one, clearly. But then when we try to assess the rest of the market, we think we might not have as much edge in the rest of the market there. So we're a bit more sort of cautious about what we say. But adding all our own insights together plus the fact base, our assessment is that Carlsberg is number one, and that we have probably grown a little bit of share over the last few years.
Your strategy right now is you even brew brands like Asahi, Carlsberg, and all that.
Yeah.
It's a higher margin, right?
Yes, exactly. So when I proudly say we're number one, I'm talking about this one. Carlsberg Green Label as a brand being the number one SKU or the number one sort of product in Malaysia. If we talk about the beer market, we are unfortunately only number two. So when you take our competitors, all their brands together versus all our brands, we probably have around 42-43% of the market, and they have more or less the rest. So we have the number one brand, but we're only number two. So back to your point, our strategy is now to keep the number one position on Carlsberg, and we have separate strategies for that, particularly around music, parties, football, and all the stuff we're doing there. And then we use all the other brands to give the consumers what they want, which is basically variety, and the customers as well. Because what worked well for 10 years ago, actually just having the number one brand was a great strategy. Nobody could touch it. At some point we had more than 60% market share with just one product, and that worked well. But today both the customers and consumers want variety. If you open up a bar or a pub or a restaurant today, you want to have at least 3 to 4 beers on draft, on tap, and then you want another 10 beers on bottles. And our competitors saw that before we saw it. So they started to focus on variety and could give their customers, 3 or 4 beers on draft plus the whole variety. Then the customers would ask us, so what can you do, Carlsberg and Carlsberg? And that started to be a big problem, and we started to lose some overall market share. So over the last 3 to 5 years, we have quite dramatically changed our strategy. Said we still use a big chunk of the money to keep that number one position. It's our bread and butter, and it's our justification in the market is we have the number one brand. We want to have that. It's a great selling point. But we want to use that strength to build that portfolio. So like you said, first we started to import all the exciting beers. We acquired a company called Lün Heng back in 2008, they already have the rights to be the sole distributor of Hoegaarden, Stella Artois, Budweiser, Erdinger, Franziskaner, etc. So immediately we got the variety, so we could connect with the consumers and the outlet. We had something to talk about, but we didn't get the profit, because for all those imported beers, you have to share with the brand owner. So when you buy Stella Artois, of course, the owner for Stella Artois makes sure that they take a good profit. Then you have to pay import duties. Then you have to pay transport from Belgium to Malaysia. Then you get the product, it's already 2-3 months old because you had to bring it in and all this kind of thing. And then you need to get it out, you need to be fast rotation. And then on draft, you even had to send the kegs back, collect the kegs, send them back to Belgium. So of course you have to sell at a higher price. So that means those brands could not compete with our competitor who have local produced premium brands. So there was a price difference. Even with that, we were still managing to grow the brands because of the excitement and the new news and things like that. But net, we had to be, the profit margin was not as good as what our competitor had. So we were catching up, but we were catching up on volume. We were not catching up on our fair share of the profit pool. So next step, and that's been the 3 years that I've been here, was try to look at some of those imported beers. Can we produce them here? And then we focused on two, which is our Kronenbourg and Asahi. Kronenbourg is owned by the Carlsberg Group, so that was a no-brainer. So we just called headquarters, said we'd like to produce Kronenbourg. They say, great, get more fresh products in the market, commitment, good quality, skip all the import costs, duties, logistics, etc. Go ahead. So we did that. But we felt we still wanted more than that. We wanted the variety. So we contacted Asahi in Japan. I knew them from my times in Hong Kong. I was doing Asahi in Hong Kong as well, and said, listen, it must be a problem for you guys that in Malaysia there are only these two big boys, and we can see that your brand has appeal, but you cannot produce here, you don't have the distribution system, etc. Why don't we do a long-term partnership where we do everything? We produce, we distribute, we market, we sell, we handle everything for you, and we just pay you a fixed percentage, sort of a royalty fee, and then we grow together. And they were immediately interested. We had a long negotiation. Japanese are very, very concerned about the brands and quality. So they visit the brewery, I think, 6 times before we sort of signed the deal. And they still come here every quarter, check all the quality, check the outlets, check everything. They're really, really concerned with the branding, and so are we. This model started actually before Malaysia. It started in Russia, where Carlsberg is very, very strong, and Asahi didn't have a presence. So in Russia, Carlsberg also produce and distribute and sell Asahi. So the model was already tested in one country before we did it in Malaysia.
Curiosity, you've got 300 over brands under Carlsberg, right?
Yeah.
307 or
Something like that, yes.
Yeah. So why do you have difficulty getting your own brands in? Why Asahi? Why can't you bring your own?
Because the reason why we have all those brands is that those are the local brands. For example, in China, where we have 40 breweries, when you buy a brewery in China, China is basically not a country. It's like a Europe, and even each province is like a country in itself. So when you acquire a brewery in China, they already have the strongest local brands. They will have some own premium brands. They will have some economy brands. So immediately you get 10 new brands, but those brands outside that province, not just outside China, but outside the province, totally unknown. And normally they will be called something specifically for the region. So in Xinjiang, the beer is called Xinjiang beer. And Xinjiang beer cannot sell outside Xinjiang. So that's the reason why we have these 300 brands, is that we have grown through acquisition. So we have acquired what we call local power brands. But these local power brands can maybe at max stretch a little bit out regional, but they would never be able to move from China to Malaysia, to Denmark, to UK. So when you look at Carlsberg's portfolio of strong premium brands that have the ability to travel outside its own country and own region, Kronenbourg, Carlsberg, Somersby Cider, Grimbergen that we now do through Lunheng, and a couple more, maybe Baltica from Russia, maybe Holsten from Germany. A few of those would have potential. And what is very nice with our business model in Malaysia is that whenever headquarter asks us, hey, could you have a look at this group brand, test it? We say yes, because we have Lunheng. So Lunheng would just order a container, do a marketing plan, test it, do it with our top 100 customers, get some feedback. Then if it works really well, they'll do it permanently. If it continues to work really well, we can also sell it through the Carlsberg sales force. So it could still be imported by Lunheng, but we put it with all our 300 salespeople across the country, and they can also sell it If it continues to grow and it has more potential, then we can look at moving it from Den Haag to Carlsberg, put more marketing money behind. If it still booms, produce it here.
Just out of curiosity, the beer market, is it actually growing, sales volume and all that?
Yes, it is. It is. It's growing slow, double digit. If we can get, if the market grows 2 to 3% a year, we try to gain a little bit market share. So maybe we can grow, let's say, 5%. But then we try to grow the revenue. So in terms of money, maybe 10%. So sell more premium beers and maximize the pricing, everything, to grow revenue faster than volume. And then, of course, the trick is to grow your profit faster than the revenue by getting scale, by efficiencies, by doing things smarter, bigger but fewer campaigns, etc. Because still the big chunk of the beer is still in the mainstream segment, where we fight against the other beer named after an animal, where that thing is taking place. That's still 80% of the market. And normally in a mature beer market, and Malaysia is a mature beer market, that segment would have come down to maybe 50%. And premium beers would come up and have maybe 30-40%. And that is happening now. And we were not in that game 10 years ago because we were just there with our Carlsberg. But now we're in that game with Lun Hing and with our local produced premium. And that's why we can grow 5% revenue out of a market that might be only growing 1 to 2%. And we are still tiny compared to those two, and that's great. That's potential. That's just potential, And if you look at our brands, these are not something taken off the shelf somewhere. These are leading international premium brands that have proven themselves in other markets. They just haven't been in Malaysia before, and now they're here, and they're here the right way. Especially the ones we produce here. Freshness, no import duties, low logistics cost, Carlsberg's distribution, all doors open. So these brands are sort of recognizable international premium brands that now get a similar cost structure and setup as the other brand you mentioned.
All your brands, which brand do you think currently requires the most marketing attention and why?
The two answers to that, you can say the newest ones needs the most. It's like a baby, so it has to be treated like a baby and build up and grow up. On the other hand, I would also say Carlsberg. I mean, when you have a number one brand that has such a big chunk in such a big segment, but you think that segment might be shrinking, because I think the premium brands and the premium segment will be growing a lot faster than the mainstream segment in the coming years. So when you have the number one brand in a shrinking segment, you need to make sure that everything you do it right. And you also have to think about your cost of doing business. So you also have to sort of settle how much can you afford to invest in a brand that is actually in a shrinking segment, because you have to do everything a lot better to drive growth when the sort of some of the fundamentals go against you.
A shrinking segment, what is that actually?
We call it the sandwich effect. It's basically when you're in a mature beer market like Malaysia, and especially here because we have high taxes. Actually, the prices from economy to mainstream to premium, there's not a big difference, because all of them have to pay the same excise duty. So you have sort of relatively small price gaps, and that means that when you go out and when the consumer buy a beer, you can ask yourself, okay, I wanted to buy a mainstream beer today, but for 2 ringgit more, I can impress all my friends and buy them Hoegaarden. Right? So today, let's get a bucket of Hoegaarden. Everybody thinks I'm the man. We're having something new. It's premium. Everybody can see. We're doing well. We're successful. We're having premium or super premium beers. But then on Sunday, I'm gonna watch a football game at the house. Nobody sees what I drink. I'll have a skull. I save the 2 ringgits. I'll have a skull at home. So net, it costs me the same, because one, I trade it up. The other one, I trade down. And consumers like to do that, so they can vary that. But they didn't buy any mainstream beer. They bought premium and they bought economy. That fits the occasion. And that's what you see when the consumers get more educated, they get more affluent. They make those choices. Today I trade up, tomorrow I trade down. They do smart choices. And that means that the premium will grow and the economy will grow. And if you imagine sort of, the mainstream in the middle, they're getting squeezed from above and squeezed from below, and that segment will sort of come down. It doesn't mean that you should give up on the segment. You have to fight hard, because this is our bread and butter, and this is where you have the number one brands. And of course, the number one brands per definition needs to be in the mainstream, because mainstream means the most popular, right?
it's not just beer and beer competition, right?
Yeah.
I mean, now Malaysians are drinking single malt.
Yes.
A lot of wine drinkers.
Absolutely, absolutely.
How do you find the competition with?
I mean, they will have higher growth rates because they're coming from a much smaller base. So it's about like what we have in the premium segment. We have decided we need to be there, so we acquired Lun Heng. Lun Heng is doing Dalmore whiskey, they're doing Jose Cuerva tequila, they're doing Jägermeister, they have some sort of cheaper house vodkas, gins, etc. They have a big wine range from Australia, South Africa, Europe. They do ciders, they do Magnus ciders, they do Savannah. So our competitive edge versus our competitor now is we can match local produced premium, we have the number one beer, we have all the imported beer, and then when we have discussed all that with the customer, we can say, hey, meet our guys from Lun Heng, let's talk about your spirits, let's talk about your wines, let's talk about specialty beers, let's talk about what we can do together and all of that. And that's a unique setup we have that our competitor do not have. So our strategy is that we can be more one-stop shopping for our customers and not just talk about beer.
Diversify to more spirits, maybe rum, gin and all that? Or?
That's definitely an opportunity. And again, Lun Heng is a subsidiary, we own 70%, but we give them freedom. We treat them like a subsidiary and we say, you can look at everything you can look at, because you're not covered by Carlsberg sort of overall global strategy. You are a local subsidiary and you just give me business cases, and then I'm the chairman of Lun Heng and I'll say which one to explore. But be creative and come up with all the things that we are not going to do, because we are Carlsberg, we are sort of a part of a global group, we have a global strategy about what we want to do, but because of the local conditions here, we have this exceptional setup that we have this opportunity to also explore other categories. And let's do that smartly without getting too broad.